Good morning. We will pay attention to the buyback of shares by a company at the average price. If we look at all the information given, they are registered with 2 million ordinary shares. So that means the authorized share capital is 2 million. The retained income on the 1st of July 2014, that is at the beginning of the year, was 128,909. It's very important to determine when is the current financial year. So they give us the retained income at the beginning of the year. So the beginning of the year is 1 July 2014. Then they issued shares in 2010 and in 2012. So that is before the current year. They decided on 30 June 2015 to buy back 100,000 shares. So the last day of this current financial year is 30 June 2015. And they're going to buy it back at the average price. Checks will be issued to the shareholders. That means that you have to calculate what the average price is so that you can determine how much money must be paid to the shareholders. If we look at the first issue of shares, it was 300,000 ordinary shares that was issued at 5 Rand each. So we will take the 300 times 5 and say the original shares issued was 1.5 million. Then they issued 200,000 at 6 Rand each. So if I multiply that, it gives me 1.2 million. So the total money that was received for the issue of shares, the share capital, is 2.7 million Rand. The total number of shares that was issued was 500,000. So I will work out the average price per share by dividing the 2.7 million with the number of issued shares, 500,000, and that will give me the average price as 5 Rand 40. Then we have to determine how much money will we pay back to the shareholders. So we are buying back 100,000 shares at the average price of 5 Rand 40. So I will multiply 100,000 with 5 Rand 40, and the total amount that will be paid to the shareholders will then be 540,000 Rand. If we look at the ledger account, the ordinary share capital had a credit balance of 2.7 million, the total amount of shares that was sold in previous years. That consisted of the first issue of 300,000 at 5 Rand and the second issue of 200,000 at 6 Rand. So the ordinary share capital increased with 2.7 million. That is the total amount that was received. We will have to reduce that share capital now because money is paid out to the shareholders and the shares are repurchased. So the bank will be credited and ordinary share capital will be debited with the total amount that will be paid to the shareholders. That means that the share capital decreased from 2.7 million to 1.60 million. And the number of shares was 300 plus 200, 500,000 minus the 100,000 that was bought back. So it means that the number of shares reduced from 500,000 to 400,000 Rand. If we look at the note, we see that the authorized share capital, the maximum number of shares that can be sold, is 2 million. At the beginning of the year, 500,000 ordinary shares were sold, and the money that was received as capital was 2.7 million. During the current year, no shares were issued, but 100,000 shares were repurchased at R5.40, the average price. So the money that was paid back was 540,000. And therefore my closing capital reduced from the 2.7 million to the 2.160 million. Retained income, they gave us the opening balance for retained income. No additional information was given for retained income, so we will only record the opening balance for retained income. So what did we learn? When shares are sold at different prices, it means that we have to calculate an average price per share when the shares are repurchased. So it is possible that they can sell the shares in the beginning when the company started at R1 a share, and then every time when they sell shares again, they increase the price per share. So you will have to add the total number of shares, the total capital that was received, and divide it to work out what is the average price. The shares are repurchased at the average price when they were sold at different prices originally.